Mr. Dan Cahill.
Hey,
How's it
uh,
going?
good yourself?
For most parts, I can't complain. I'm so happy to see you. I'm very happy to have you here. Obviously, this is Dan. Welcome, Dan. And let's have a quick background first, just for people that may not know you, or for people that have not had a chance. Uh, Talk to us a little bit just about 2-minute background. You're a financial advisor. You're a CPA, actually. You're not a financial advisor. Talk to us a little bit about your background. How did you get involved with investing, and walk us through your journey?
Sure, thanks. So I'm a CPA. I work in tax. I primarily work with businesses, lower to mid-market businesses, as well as individuals. Um, multi-state operations, international operations, and such. I've been doing that for about 10, 11 years now. And
Nice.
yeah, and I got into investing. I always had a 401k, but I never really, paid much attention. It was kind of just a contribute 6%, the company matched 3%, and never really opened it or even logged into my account. And then I think in 2018, I just caught the itch that I wanted to get into investing, and what spurred the interest was Amazon. I've been a big believer and user in Amazon since high school, back in the early 2000s. When they were just a bookseller, right, an online
Right.
bookseller. And I knew nothing about investing because they don't teach you anything about that in school. And I didn't have that education, the investing education growing up in my house. But I always thought, man, it would be cool to own Amazon stock. I didn't even know they were publicly traded until 2018. So once I found out, I said, oh, I got to open up a brokerage account. So I raced down to Fidelity. Remember, it was downtown Boston. I had to go in person to open up an account. They have an office right down the street from my firm's Boston office in the financial district and Post Office Square. And I remember going in there and opening the account, and I was just trying to get it open as fast as I could. Amazon stock at the time, this is before the split, I think was around
600, 700?
No. It was still up around $1,000, 1,100, I think. And I just remember I was like, can you just get the money in there as quick as possible, and so that I could start buying some stock. So finally, they got the money in. I bought however many shares I could with whatever money I had, and I remember it went up pretty quickly because I guess I had a good instinct that it was undervalued at the time. And I remember getting that rush of seeing all the green in my account. And I said, you know what? It's already gone up 10 or 20% in such a short time. Let me just sell it, because it'll probably come back down, and then I can buy it again. And it did. And
Wow.
That's what kind of sparked my interest, was being able to buy and sell Amazon, buy and sell that first year. And that's kind of what got me hooked. Yeah, at the time I had also, let me just state, before I opened the account, I got The Intelligent Investor, the book,
Yeah.
that everyone, every investor.
Benjamin Graham.
Yeah, it's Benjamin Graham. And I started reading it, and 500-page book or whatever it is, and I thought at first, I got to read this whole book. I got to do maybe a paper trading account before I can do the real thing. But I got maybe 50 or 100 pages in, and I said, you know what? I'm going to learn by just doing, rather than reading a bunch of books. I got the Random Walk Down Wall Street, a few books that all the first-time investors are supposed to get, but it was actually jumping in feet first, just doing it, that has taught me really everything I need to know.
That's very cool.
Yeah,
That's awesome. That's a great story. I can't believe you actually had to walk into a Fidelity Boston account opening twice, but yeah, whatever works, I guess, right? So you got started with Amazon. You had a background in CPA, or you are a CPA.
Yeah.
So it should have been a little more natural to you. Is that right? And do you consider yourself more of a, well, given that you've traded Amazon in and out, do you consider yourself more of a trader, an investor? Where would you put yourself in the spectrum?
The CPA background doesn't really have anything to do with the investing because I'm not someone who's poring over fundamentals, and I'm not really a long-term investor at this point. I look at investing more as, settling into a relationship with stocks, maybe marrying a stock. That you can always get divorced later, but it's more of a long-term thing. And I'm much more prone to dating stock, short-term dating. Let's have a fling, me and you. And so to me, it's much more about the psychology. It's about seeing, where the fear and the greed is. If people are running away from stocks, is that an opportunity for me to run in to a burning house? Or if people are, greedy, is that an opportunity if I was able to get on board early for me to sell before everyone goes for the exits, right? So
How do you then put into account catching a falling knife scenarios when everybody's heading out? Sometimes there's a reason why everybody's heading out. How do you discern between, hey, is this catching a falling knife or is this really low value? Do you do a little bit more analysis for that?
probably, I look at the tuition. The cost of learning is having actual losses, right? Traders don't go to a 4-year school to learn how to trade. They pay their tuition by incurring real losses.
Right.
And I've had enough of those at this point where I see a stock like Rivian that I traded, earlier this year. And I went up to 19, 20, 21, and then it falls back down to 15 to 14. Oh, it's all-time lows. And you say, oh boy, that's getting attractive. Rivian is this company that was $100, $180 at one point, a year or two ago. Is this, something I should consider getting back in, even scaling back in? And, you say, well, it's in a downtrend, it's catching a falling knife. I've learned in the past, I've gotten burned so many times before. Maybe I should just stay away for now and, let the whole market kind of settle out, because the whole market hasn't really fallen. Rivian might be making all-time lows, but the market is still holding up. What if the whole market, the bottom falls out of the market? Then, Rivian's going to just get, flushed out even more. And now it's down to about $12. So I think that I'm much less eager and over anxious to catch a falling knife than I was before.
Rivian is an interesting company. Just to give you context, where I live in Seattle, I live in one of the neighborhoods of a suburb of Seattle called Cahill. Surprisingly, I take my dog out for a walk every morning, or I might go for a run in the morning.
Yep.
I've seen a lot of Rivians for what I would have thought is a company that has produced very few cars in our neighborhoods. So there are at least 10 compared to about, obviously, between 50 and 100 Teslas is what is the average here. We live in a neighborhood of only 600 people. Our neighborhood, I wouldn't say that. Our city, if you want to call it that, is only 600 people. It's a small little village called Cahill. It's a suburb of Seattle called Bellevue. And there are like 10 or 12 Rivians in 50 to 100 Teslas, which is okay because this place is. But I would have not expected to see so many Rivians. And you know what the interesting part is? I've seen 3 Lucids. I've not seen too many Lucid cars at all. But Rivian, to me, I've heard the founder speak on one of the podcasts. I think it was How I Built This. It's a fascinating conversation. Have you listened to that one?
I believe I caught part of it, and I remember you posting about that. And I know I've also seen him with Jay Leno, do some interviews. So he's a fascinating guy. I think he's a brilliant mind, and I think that's one of the things that attracted me to the stock initially.
The guy has been dreaming, eating, sleeping cars since he was 12. That is dedication and an immense amount of love for a specific area that I don't have for any of the areas. But yeah, Rivian is an interesting company. Lucid is as well. I don't know. I'm less bullish about Lucid than about Rivian. I think I've just seen a lot more Rivian cars, and I think the fact that they have a very good partnership with Amazon now that it's not exclusive is an opportunity for them to grow from here. And they have a good product from the cars and the trucks that and other cars, the trucks that I see and the SUVs. It's pretty good. Let me switch gears. Tell me a little bit about your holding period or the kind of strategy that you follow to figure out where to buy. Is there a scanning and a screening method, or is there here's the watch list? Is that how you go about your process, or is it a lot more fluid?
Yeah, I'd say my scanner is Twitter, to be honest with you. I owe really everything to um, the wonderful investing community, the FinTwit community, that is just priceless. You can't put a price on. Um, I'm really, I work full time. I have interests outside of work that, um, I just don't have the amount of time that a lot of these people who are dedicating huge chunks of time every single day to keeping up with the financial news, whether it's the macro, which seems to be really all that matters recently, right? SPY
Yeah,
and the
last
macro.
6 months or so.
It's hard to be a stock picker in this environment, but or when the SPAC boom happened, um, the people who are really putting in the time to do the due diligence, and I think certain times of the year I have more time than others. And when things are really hot and interesting, I really focus in. But and I can really go down some rabbit holes, researching companies and stuff like that. But it all starts with Twitter. It all starts with people who are much smarter and more experienced than I am, and just trying to get a sense of where the puck is moving, and trying to skate to, to borrow that hockey analogy, skate to where the puck is going.
Who are the people that you found the most interesting new opportunities for you to dwell down or go down that rabbit hole? Which are the accounts that you consider to have a high consistency hit rate?
I mean, for anyone interested, you can just go check out who I'm following. I do follow, I've been following a lot of people lately in different, not just investing, but also, health and, mind and body and stuff like that. Kind of like my handle, mind, wallet, body. I initially wanted to kind of focus on not just the wallet part of it, the finance, but other pieces. But there's so many great traders, SPAC and PanMan. There's Chris, there's I don't know if I get all the handles right, but there's Stock Crusher, there's I can just go into my follows here.
Yeah, I know. I'm gonna go check out who you're following after this to try and get a sense for who are some of the people that are interesting to follow.
Yeah.
What tends to be your holding period? Is it within the days, weeks? Is it swing strategy? What tends to, or is it on a stock by stock basis?
Yeah, it depends. It can be, a couple hours to a couple months. It can be coming in and out 10 times. It could be, trading it once and being done. I think it evolves. It's something that I think that being able to trade the same, ticker multiple times is something that, as I get more experience, now I say, okay, you know what, I can become familiar with this ticker and how it behaves and how it reacts to the rest of the market. The market conditions are constantly changing. So if there's an opportunity like Rivian to trade, I was in and out of that with day trades mostly. I did a little bit of swing, but mostly day trades in the month of January and February, and that worked for me. But so I was able to take a lot of little bites of the apple, whereas some of the SPACs, back in 2020, 2021, I would come in and, once it kind of maybe took off, I would just get out and not revisit it because, I felt like the risk profile was so elevated after a couple of days where it would go up 50% or 70 or 80%. Maybe Rivian would have gone up 5 or 10%, and I would say, okay, now I can come back in. But it depends on the magnitude of the move and just the rest of the market, I think.
Yeah, those were the fun days, right? The SPAC days. I remember due diligence was at 10 in the night, 10:15 Twitter thread. 10:20 in the night, we'd have to make a decision. The early morning, next day, we had to buy, sell, hold, whatever we had to do, right? And then suddenly, because of that, there'd be a lot of rumors and speculation. Well, Joby was taken public by this SPAC, so maybe Lilium gets public by this other SPAC, and so everybody starts to look at, okay, maybe it's IPOE or IPOF or whatever those were. Yeah, those were fun times. Those were fun times.
Were you also very active in the SPAC space during?
I traded all of them, I think, with a very healthy dose of skepticism. So I traded them and I would do very short, 1 day max with some of the holdings. Some of them were a little bit more longer term because I believed the companies were going to do well, like Bark and Catapult. Catapult was a buy now, pay later company. And
Yes.
then Bark was a competitor or early competitor to Chewy. Both didn't do very, very well. I had a little bit of money in Butterfly Network, which is the handheld medical devices company. But all of the others, I just got in and got out. SoFi, Clover Health. I can remember so many names, and all of the aerospace ones, I just decided not to play. But the early, once they become SPAC, DraftKings, I held for quite a bit of time. They were a SPAC company.
Yes.
Curiosity, the TV network, CURI was the ticker symbol. I held that for a little bit because I made money. One of the other guys, Dylan, was the one that put me onto that company. So I remember a lot of SPACs I held for a little bit longer, but then as soon as I saw that they were going up way too quick, way too fast, I'm like, no, this is not going to work. And I think if you remember, we were following each other. There would not be a week where go by where I'd say, this is going to crash, this is going to crash, this is going to crash. And it didn't crash for a long time. So I looked like a fool in hindsight, I guess.
I felt the same way. I tend to be very cautious, and I realized that and the harder they rise, the quicker they fall, right? So, I mean, there were ones that had I held longer, I could have made a lot more money, but there's also ones that had I held longer, I could have lost a lot more money. So I think in the end, you have to find an approach that is consistent, that really works for you on a personal, level, because that's what trading is. It's so personal. There's an infinite number of ways to make or lose money. And if it's one thing I've learned, it's you can't follow someone else's plan. You have to be able to stomach the volatility in these growth stocks. And if you don't believe in what you're doing yourself, you're going to sell for a loss at the first sign of distress. Whereas if you really believe in that company, or you believe in the trend or whatever, you have more of an aptitude to ride it out and see your thesis through.
Yeah. What is besides following Twitter, what has your thesis been? Is it mostly around looking for momentum stocks that get mentioned that you do a little bit more? How much time do you spend researching your trades?
It depends. I think a lot of times I'm kind of a buy first, ask questions later. I just have a sense. I'll jump in and then I'll, start to research. And as long as I hold it, I will, like Rivian earlier this year, I bought it, and then I just had an instinct, and then I was just researching it, every day. I would go on forums, the Rivian forums, where the owners were talking about, the actual product, the vehicles. I would just look for every single article I could find, every single forum. I would refresh the pages, several times a day, and just go down every rabbit hole I could to learn as much as I could, and realize that if there was new information that came to light that was unfavorable, I was so on top of it that I could get out, quickly, hopefully before anything went down. And I felt like growth stocks at the time in January were so beaten up that it felt to me like there was a lot of fear, the year-end tax loss harvesting and selling, that it was a great time to be, in these stocks, whether it was Rivian or lots of other stocks that, had a nice increase over the month of January and February. Now I wouldn't go back in at this point. I just feel like the markets have been sideways, recently, as we have the bulls and the bears, fighting with this tug of war. But it really, to me, the overall market conditions have to be right for me to feel like I can go into a single stock trade, because I like to go in heavy a lot of times, and I find that that can elevate your risk greatly, but it can also amplify the rewards greatly.
Yeah. Yeah. What I found usually is that in a lot of these cases, you need to have your way of how you figured out you want to make money. And like you said, there are thousands of ways you can make and lose money. And just following one approach for a reasonable good amount of time, whether the approach is for 12 months or 18 months or sometimes even longer, that's when otherwise what happens, I've seen a lot of people switch from, oh, I'm going to follow the EMA and technical analysis thing, and I'm going to keep doing that. And other people switching immediately to options. I'm going to just follow the option flow and look at the high value options, and switching again and saying, no, I'm going to, that's the switching around. You never get to find out what works because you'll find out a lot of things that don't work, is what I've seen. Or you might get lucky initially for the first couple of times and you see that works. Then you take a hit, you figure out what doesn't work within what works, and then you can move yourself up.
Yeah, well, I mean, I think there's a reason why they say 90% of traders, lose money in the long run. Because to me, I always try to remember that the market exists to inflict the maximum amount of pain upon its participants. I really believe that, because it's like the casino, you go and you win a few times, you feel good. And I know it's not, really, gambling if you're going about it in a smart way, but it's similar in that, oftentimes the more you come back, the more the market's going to catch you. And, you're only as good as your last trade. And it will keep you very humble if you think you know more than you do.
Yeah, there are a lot of days when you start to question yourself, right? Do I even know what I'm doing? Why am I doing this? Even after the nth amount of analysis, looking at support, looking at resistance, looking at the headroom, and then the stock behaves exactly in the opposite direction of where you thought it would go. You're like, I did all this work, 2 hours I spent on the chart. I looked at all of this data and I expected it to go this way and it went this way.
I think sometimes having less preconceived, biases, I think having less information sometimes can actually be beneficial. I think that sometimes it can work against you if you're overconfident. So like all the SPACs, I was kind of naive at the time trading them. I was inexperienced, and seeing just how I actually believed in a lot of these companies and seeing how far they've fallen. If this SPAC boom happened again, would I go in as hard and heavy? Maybe not, because now I've had that hindsight of seeing just how far a lot of these have fallen. So I think that sometimes, ignorance is bliss, and it can, work out to your advantage.
On the flip side, I would say, though, I haven't been through the up and down of 2000s in the internet boom. And that made me a lot more cautious with the SPACs. I wonder if I would have made a lot more money had I been a little less cautious with the SPACs on some of the early months. This, I would say, would have been in the June, July of 2020. The SPAC boom was just beginning, right? Spice had just come out. DraftKings was in March or April of 2020. If I hadn't gone through the 2000s, I would have spent a lot more time. I would have invested a lot more money in a few of the SPACs. Expected a downturn by December or whatever the case might be, and turns out that's exactly how it played out. July, June peak, August peak, September it kind of changed a little bit, and then by October it was done. It was like a boom and up. Same thing happened even with EVs during that time. If you remember, a few SPAC related to electric vehicles, besides the fact that there was the Chinese 2 or 3 EV companies and Tesla, there were a whole bunch of LIDAR companies that all went SPAC, right? And they all, QuantumScape including, which is a battery company, they just went through the roof for a little bit. And I was going, yeah, this is going to come down. But I participated in some of them, made a little bit of money in them, but I never went hard to the hoop because I still had the scars from 2000, and I'm going, yeah, this, I've still had one or two stocks that I held. ICGE and CMGI come to mind. These were 2 stocks. You're too young to remember this, but 2000, they would go $20 to $30 up every single day for like a month. They kept going, and people thought nothing would change. These things are just going to keep going and going. But then, obviously, even way before the 2001 crisis, they took a turn for the down. But you learn sometimes, and sometimes I wish I hadn't learned those lessons. Could have been ignorance is bliss. On the other hand, I'm glad I had learned some of those lessons, because then I was a little more cautious. I didn't lose as much as I thought I would. It's always better in my mind to be more risk averse and less friendly towards taking a lot more risk.
I remember like holding Lucid back when it was the Michael Klein stack. I forget the ticker, CFIV, or I don't know, forget what it was, right? And I remember I bought it at like $12 and change upon the rumor of the news that they were going to merge with Lucid. And I said, oh, this is a big deal. And I remember Stock Talk Weekly had, I think I saw it on his feed first. He was big into breaking the news back in the day, and I said, all right. So I went in hard on Lucid, and within a few days, it was up to $18, and it was already up 50% or whatever, $6 on a $12 stock at 50%. And I remember I sold it, at the time. It was just a rumor. It wasn't even an LOI. It wasn't a DA. It was nothing but, and there was a lot of uncertainty, a lot of risk. It had already gone up 50%, and I had already done very well. So I sold it. And what I remember was that a lot of people were attacking me on my timeline. I never had to block so many people who were, calling me a pansy, and it was for, and worse things for.
If that's all they call you, you should be happy.
It was, it was nasty, and this thing is a gold mine, and you're stupid, and all these things. And I guess they were right in hindsight, because the thing, kept marching up to the 30s in the following weeks, and a lot of people sold in the 30s. But then I kept going, and it was, $64 after 3 or 4 weeks. And I remember feeling some of that fear, that FOMO, that fear of missing out. And I said, well, I could have made so much more. But at the same time, I said, I did well, and I made 50% in a couple of days. But having that skepticism of, these things are crazy. You just don't know when the music is going to stop, the bottom is going to fall out.
I agree.
So, I just try not to have regrets in that sense, because there's always going to be another opportunity. I don't try to revenge trade and make my money back if I lose on one or miss out on some gains. I just, try to, just keep a short memory. It's kind of like a cornerback, in the football, right? They say in order to be a good cornerback, you have to have a short memory, because otherwise,
you're going to keep remembering the hit.
Yeah. So that's all you can do.
Awesome. This was great, Dan. Thank you so much for the time. It was definitely good to connect, and we're going to continue seeing each other on FlintWit, and hopefully in the next couple of years, we'll get to have more stories like this.
Mukund, it was, am I pronouncing your name? I know we've never spoken in person, so could you
Mukund.
What?
Mukund.
Okay. It's been an absolute pleasure. Thank you so much for having me, and look forward to many more successful years, hopefully. And
likewise. Thank you, Dan. Take care, buddy.
You too.
Bye.